Hello, Oracles. So, what can we expect from the stock market this week, the week of November 11th, 2024? So, last week, of course, we had the election results that came out. We had Donald Trump becoming the victor, and he's going to be the next president again. So, we saw the stock market boom immediately afterwards, just took off like crazy. And as we speak right now, cryptocurrency is flying high. I own Bitcoin, Ethereum, Dogecoin, and Sheeb, and Dogecoin and Sheeb are taking off like rocket ships right now. We have also seen Bitcoin and Ethereum pushing up higher. Ethereum had been kind of a laggard, but it's now catching up with the rest. So, will we see this continue going forward? What else could we see from the market this week that might continue this path forward or derail us entirely, or maybe we just stay the same and hold here? So, before we get into that, please just make sure you hit that like button down below and subscribe to the channel. All right, so looking at the things we have going on this week, as we just said, we've been seeing the stock market, cryptocurrency, everything has been booming. There are some areas and sectors that have been falling backwards just because they may not play well with what Trump is going to be doing. But for the most part, broadly, the market is taking off right now. So right now on the Fear and Greed Index, we are at a 61 at greed. Now, despite all of the running up that we did last week, we did not get to extreme greed. We will need a little more prolonged upward movement to get to that point. If we see that happen this week and we continue going up, that might end up happening. So the question is, how long is this going to last? Are we going to continue pushing up through the end of the year? I still do think that we are going to be seeing a recession next year. We're going to be seeing most likely weaker than expected jobs data coming out during the holiday season. And then after the holiday season, we're going to see all those seasonal layoffs take place, and we're going to see a weaker jobs market. Don't forget that there's a lot of companies out there right now that have been telling us that they're doing layoffs. And it's not like they've done layoffs. It's not an instant thing. For instance, Visa said they're doing 1,400 layoffs, and that is happening by the end of the year. So this is going to be continuing going forward. So these people, as they're getting laid off, will start looking for jobs, but because there's less and less job openings, maybe they get some seasonal work. Maybe they've got a package or whatever kind of job they had there that can kind of float them through the holiday season, and they don't have to worry about getting a job. But then when they get to the end of the year and we start looking in January, what do we have for job openings? A lot less. There's no seasonal jobs that are out there. And all the companies that had been doing layoffs clearly aren't going to be backfilling those positions because they're basically shutting those positions off. So we could be seeing some issues in Q1 or Q2 of next year when it comes to jobs, potentially leading to a recession. But for the moment right now, we might end up seeing the stock market rally into the end of the year. Again, at this point, we're kind of at a very frothy part of the market based upon what a lot of people are thinking out there right now. We're seeing, market wide, a higher PE ratio than we normally see in the market. Does this mean we're pushing up to the next level? Because it used to be in the mid-teens, then it pushed up to the higher teens, then, lower 20s. So are we pushing up, or are we just having a blow off top moment and we're just kind of waiting for it to cool off? My personal feeling is, just like you see everything in the stock market, whenever you see an emotional reaction in the stock market, it is usually exaggerated too much one way or the other. Right now, we're seeing an emotional exaggeration to Trump winning the presidency, and things are taking off. A lot of short squeezes are happening right now. Cryptocurrency is pushing a lot higher. So, not to say that we're going to have a massive crash or sell off, but typically, when you see an emotional reaction like this, you end up seeing a cooling off moment shortly thereafter. So when that's going to happen, I don't know, but I just want to be prepared for it for when it does happen. I took a little bit off the top of my Dogecoin. I'm really not selling anything else right now at the moment. I'm just kind of waiting it out, and I'm at this point building up cash. I have hit level 2 in my portfolio. So right now I'm getting myself to 10.25% cash because of the fact the market is screaming up higher and higher. That means I need to add a higher dollar amount and a larger dollar amount to that cash position. But again, that works out perfectly fine based upon my strategy because we always see market pullbacks. So when we do see the market pull back, I'll have even more cash ready to deploy in those moments and keep my portfolio balanced. So that's where I'm at right now in my portfolio. But what could end up curtailing us to bring that stock market down? Well, this week we have CPI and PPI data coming out. Now, inflation, for the most part, people have been thinking the Fed has defeated it. The Fed themselves say that they're pretty comfortable with the inflation level where it's at, and unemployment was going to be their new focus. Unemployment has showed us that it definitely needs some attention, hence the reason that the Fed has been cutting the rates. But we've also seen inflation tick up a little bit last month, nothing to be concerned about. But there's a lot of concerns out there in the market right now based upon what Trump wants to do, and that is potentially going to be causing some inflationary pressures. A lot of tariffs going on in other countries could in turn lead to some higher prices here in the US as all those tariffs take place. Now, others are saying that's going to produce better American manufacturing, and thereby it's going to keep the prices lower and keep all the money flowing within the US. We will see as this plays out. Time will tell on that one. But those inflationary concerns are out there because of that. Now, we do see oil prices are still low. That is a very good sign. But how low are oil prices going to stay? Now, with Trump also looking to open up the oil pipelines again, that could keep us off of any issues going on in the Middle East, where we could end up seeing oil prices spike due to tensions over there. But we still have a couple of months before we end up getting to that point. So, do we end up seeing tensions rise in the Middle East, causing oil prices to spike, thereby causing inflation to spike? Or can we hold off until Trump takes office and thereby opens up oil pipelines again and starts to build up those oil reserves again? President Biden depleted a lot of those reserves during his presidency. Now, during that time, we did have a lot of those issues that are going on due to COVID because we had supply chain issues. So it wasn't bad having the oil reserves getting depleted. So it ended up being a good thing along the way. But now it's time to build those barrels back up to avoid any other issues, because if we get an oil spike that's an inflation spike, that could be detrimental, especially as we're looking at unemployment being kind of a concern. So, with that said, looking at CPI and PPI data this week could be a big focus for the market, because if we're starting to see those signs of inflation rearing its ugly head again, that could scare the market and cause a sell off. Now, if we get things that are in line or better than expected, that could keep the market calm and continue us rallying. So, what are the expectations for CPI this week? Well, last month, as I said, we were forecast at a 2.3% year over year, and we got a 2.4%, 1/10 of a percent higher than expected. This month, we're expecting that same 2.4%. So if we come in line with that 2.4%, this is a good number, and we're basically the Fed wants to see us on a regular basis between that 2 and 2.5% inflation. So if we can stay here, that will be a good sign. If we're looking at a 2.5%, that could give the market a little bit of a pause and say, are we starting to see inflation coming back? And now on a month over month basis, we were forecast at a 0.1% last month, and we came in at a 0.2%. Now again, 0.1% on a month over month basis is much more significant than a 0.1% on a year over year basis. So the forecast is again at that 0.2%. And that is basically, again, where the Fed does want to see us at a 0.2%. But are we going to stay there, or are we going to be seeing a 0.3% or higher? That is what we're paying attention to this week to make sure that we don't see those numbers creeping up. Now, from a core standpoint, year over year, same thing happened. We were forecast at a 3.2%, came in at a 3.3%. So as of right now, we don't have a forecast, but I'm guessing that we're going to be forecasting probably the same at a 3.3%. So again, same holds true with this as it held with the normal CPI. Let's just see if we come in line with forecast. Now, this is a number that we would like to get below the 3%. We will see if we get down there, but if we see it creeping back up, could be some problems. And then the month over month core, again, 0.2% came in at that higher 0.3%. Now we're forecast at 0.3%. Let's see where we come in line with that this week. And so these numbers are going to be coming out on the 13th. That's going to be on Wednesday. And then we have PPI data coming out on Thursday. And as of right now, there are no forecasts for PPI, but PPI tends to be a leading indicator for CPI, because that's where their prices are basically starting from, is, from the producers that go to the retailers or whoever's going to be distributing those goods. And then we as the consumers recognize that CPI data. So this is what we're paying attention to this week. Now, again, with all the booming that we saw last week, there's nothing else really going on unless some black swan event comes out or anything. And don't forget that Trump does not take office until the end of January, January 20th. But we could be seeing a lot of sentimental moves based upon this now. So Trump has been coming out saying a lot of different things, saying different policies that he's going to enact. So if he comes out and says something that could move the market one way or another, that could also be reflected in the stocks as well. So again, all of these things to pay attention to as far as what's going on. Again, if he comes out and says something about cryptocurrency or with Elon there and Dogecoin, a lot of different things that could move the market based upon what is said about the next 4 years and what Trump is planning on doing. So it's an uncertain time, could be very good uncertain time, as we saw last week. or it could cause the market some fear and moving back in the other direction. Trump is favored by the market because it typically favors big business, and big business, of course, is what ends up moving the stock market. And now another thing too is small caps could be looking very good. They've been very strong over this past week as well, and it was very difficult. Again, this past year we saw more bankruptcies than we've seen in the last 10 years, and that was all due to the fact that it was very difficult for smaller businesses to survive. Higher interest rates, they couldn't borrow money for what they wanted to. There was the consumer was running out of money and didn't have any credit anymore. So it was very difficult for small businesses to get by because they don't have those giant stockpiles of cash that a lot of the larger companies do. So with Trump coming in, it could favor those small businesses again to be able to thrive. And that's why we saw the Russell 2000 doing so well last week. But don't forget that inside that Russell 2000, there's a lot of zombie companies that are still out there. This is something that we talked about in the past, where recessions are usually a good thing when it comes to kind of giving us a fresh start, doing some spring cleaning. Obviously, it sucks to go through, but it cleans out a lot of those dead weight zombie companies. These are companies that don't even bring in enough money on the bottom line to pay off the interest that they owe on their loans. Those companies are really just sucking the life force out of the economy, and it's not a bad thing to kind of flush them out. They're not companies that are run well. They've been struggling in whatever reason. You kind of cut them loose and then you start fresh and you don't have dead money that's out there. So these companies here getting flushed out, not a bad thing, but the Russell 2000 has a lot of them in there. But maybe things that Trump are going to do is going to take them from zombie companies and help them out. Or maybe we end up getting to the point where we end up getting a recession and we end up seeing those companies go to the wayside next year. And if those companies do go to the wayside, that just means more layoffs, less job openings, higher unemployment. So again, the longer term, 8 to 12 month ramifications of what are going on is what I'm focusing on in that aspect. But in the near term, all the sentiment about what's going to be happening and the potentials right now seem to be very positive. So we're seeing a very positive sentiment about the potentials of what could happen. And we might get a lot of that baked in right now. For instance, you're looking at Tesla and Palantir and SoFi. They're stocks that I own and they're booming. But is this now putting way too much future growth onto the stock price itself? Those are the things that I'm kind of just leery about. Cryptocurrency is totally different because that is a whole different world to look at over there because they don't have like a bottom line that they're looking at, any cash flows coming in. It is strictly like a currency, obviously moving in one direction or the other. But when you're looking at companies that are actually having to drive revenues in, when you're starting to see these companies' stock prices get extremely frothy as they are, you're starting to bake in a lot of future growth, which is similar to what we saw with Tesla in 2021. And that is kind of what caused Tesla to be flat for the last 3 years, is because there was so much future growth baked into it. And then we had the higher interest rates and Tesla wasn't growing at all. So that was very detrimental. So not to say that, we're going to see that happen again. Tesla could very well come out and, as Elon said, see 30% growth year over year again starting next year. If that happens, maybe that's not true. And that's the same with Palantir and SoFi. But the companies now have a much higher bar that is being set for them based upon the stock price to hit those future growth numbers. If they do not achieve those, the stock price is naturally going to come down due to that. So just make sure you're paying attention to that, the way the stock market moves in that manner because of those things. When it comes to dividend investing, those companies there are more based upon free cash flow. And when you're looking at it from a dividend standpoint, the stock price itself doesn't matter. That is not what's factoring into the actual growth of that dividend payout. You're looking at free cash flow. So you could see free cash flow going up, but the stock price coming down, which in turn means that you're going to be getting more income at a discount. And because the free cash flow is going up, the company will most likely raise their dividend. So you get more income for a much cheaper price. That's why I like the dividend investing to kind of balance the portfolio out. Because when you see the growth companies like the Teslas, Palantirs, and SoFi's selling off, there's nothing to kind of soften that blow when it comes to dividends. And sure, you can buy them for a lot less, which is fantastic because those are going to be much more higher growth companies and you'll get a bigger return on your investment from the equity appreciation standpoint. But during the times of pain, it's going to be even more painful. And all you can do is just have faith that that company is going to get through this turnaround and you're buying at a cheaper price and you wait for the equity appreciation to come back. When it comes to the dividends, you're going to continue receiving that cash flow coming in, which means that you're going to be able to buy that company for even less with that cash flow coming in, thereby buying it and causing it to grow bigger as you come out of it. So that's just the two different ways to think about it when it comes to the investing, as far as what we're going to see over the next 8 to 12 months and what we could be seeing for the next couple of months. And this week in particular, of are we going to see the stock prices continue to go up, thereby causing the valuations to go higher and set that bar higher for all of these companies? Or are we going to cool off a little bit this week? You guys can let me know your thoughts in the comments below, what you think is going to happen. But we'll see what happens with CPI and PPI this week on Wednesday and Thursday. Thank you guys so much for watching. I appreciate all the support. Have a great one.